Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you as always. What's on our radar today? Well, the ECB just left their rates unchanged, so we're kind of, if we can, talk about this little macro picture we've got between the trade war and rate cut at the Fed and how the market's reacting to that. But we have some individual movers as well. Uber had a big day yesterday, broke above its IPO price. We'll talk about that. We've had earnings this morning from SFIX, 5 below. Yesterday after the bell, we had Signet and CIEN. And after the bell today, Zoom and BYND meet. So a number of earnings to discuss. We'll also talk about the action. I don't know if it's still going on, but the action that Dennis pointed out to us in IBM this morning. Some funny activity there. Today's guest, Todd Sullivan, Rand Strategic Partners. He would join us at 8:35. In the meantime, Joel, what is happening here?
Green on the screen, up 8.5 handles, 36.25. Little dip off the open, little Mexico worries. Got down to 12.75, turned around on a dime, pre-market high 38 even. My number, got a nice number on the outside for you folks. A pair of highs right at 28.42, 6 points away. That's good target on the upside. Crude dipped into the 50 handle yesterday, but now up 38 cents at 52.06. Gold in the green by 7.10, trying to get over 7.50. Silver itching towards $15, up 15 cents at 14.94. And Bitcoin, tight range, just hanging out, up $17.50.
Where's Bitcoin? Where's the price?
The futures are 78.70.
Oh, you know what? How do I buy Bitcoin without actually putting it in a crypto wallet? Like the GBTC, we can go, but we know that doesn't track perfectly. Well, is there any other ways?
Yeah, why can't you buy the futures?
I guess you can buy the futures. You pay up a little bit for it. Are they liquid enough? Then what kind of spread am I paying on the futures here, Joel?
I don't know what the spread is, but they've only traded 226.
So dang liquid.
You refuse to trade the GBTC. You absolutely refuse.
Yeah, I've never made a Bitcoin trade, but I think it's going 10,000. I'm not a believer in crypto. We know that, but I think it's going to 10,000. So if I was a trader, I'd be long right now. I just have a feeling it's consolidating for the next move higher. It's got some legs. It's getting some life here again. Jeremy Newsom says 10,000, and I say 10,000 as well. We're on the same page here. I think crypto, I think Bitcoin, not crypto itself. I think Bitcoin is going to 10,000.
Danny Jack Johnson says you can buy it on Robinhood, but you
just
don't.
On the futures?
No, you could buy Bitcoin on the Robinhood platform, but I know you don't have that.
Like with the digital wallet and everything? They have it all hooked up in there?
I don't know.
How'd you went and actually open an account, eh?
Yeah.
So when you were doing it,
yep,
you put the digital wallet. You didn't lose your code, your 16
I don't think I ever got that far with a 16-digit code.
Well, yeah. Well, how did you do it? So tell us about your Bitcoin trade, because to the non-Bitcoin traders out there, you bought it like 6,000, you sold it like 50. You were like a genius in it. You took the easiest money out of it, and so you went in. Did you actually get the crypto wallet, put them in the wallet and stuff?
I never got the wallet. Maybe I had a wallet and I don't.
Jill didn't know if you had a wallet or not.
All I know is that I put the money into the account at Coinbase, and you had to. It was a little bit. You had to show your driver's license. There's quite a bit of things you had to do. It was in there, and the reason I bought it is because we remember that it was the end of 2017. We did the Bitcoin special. And I'm like, okay, you got if I'm gonna be doing a special,
I better buy some Bitcoin.
Right. And then it was just the craze, and it was coming up on Thanksgiving 2017. And I'm just like thinking everyone's gonna be talking about Bitcoin at Thanksgiving dinner. And
it was a good call.
Yeah. And then it was kind of like the Saturday thing, and then it went, and then the day that I wanted to get out was the day that it hit like 20,000. And
you were still in it at that time.
I couldn't get out
on the way up.
I couldn't get on my Coinbase account. I was like,
You were trying to sell it and they wouldn't let you in. It was like old NASDAQ from the 1990s. They let you in, but they won't let you out.
and I said, next time I can get into this account, I'm going to sell, half or 3/4 of the position. And I think that was like around 15 or 16,000. And then I gave myself a mental stop at 10,000 on the remainder, but it just hung out. I think it was like around 12,000 too long. And I said, out, hit the bid, but never re-entered, and regretting that a little bit. I did look at the GBT a few times, but yeah, I mean, it's coin. You don't need a wallet. Someone mentioned here you can keep it the exchange or I don't know. It's just
Dennis wants to keep his Bitcoin at the exchange, right? Do that, Dennis, and see what happens.
Hey, Dennis, is that IBM action still going on, or did that settle down?
No, it's settled down. We were just talking about when these algorithms, it was funny in the pre-market, the IBM bid was changing so rapidly that you couldn't even take a look at it. I mean, we see this stuff, on everything all the time. I mean, it's just funny to see it on a stock like IBM in the pre-market, which typically doesn't move at all. But, you see it on the Qs, you see it on SPY, you see, the bids and offers moving all the time. They're moving along with price. But sometimes on smaller cap stocks, they're just moving around for Q position. So you get two algos fighting for Q position, and one will hop the other one, hop the other one, hop the other one. They'll come up to a certain point, the one algorithm will cancel, and then it'll go back down and repeat itself. So you'll see instances, and Nanix has tracked this and stuff, where you see thousands and thousands of quote changes done in a very short period of time, up to even the millions of quote changes. It's just pure quote pollution. But what happens is you get one algo fighting another algo for Q position, and they get caught in an endless loop, and they're just battling each other. And then, they go all the way up until one cancels, the other one cancels, and then the other one brings it back in the bid lower, and the cycle repeats itself. We used to call it back at Bright Trading when this first started, when algorithmic trading was, first, you're talking like early 2000s, when you really started to see some, action with algorithmic trading starting. We called it the flasher, when the quotes would change so rapidly you couldn't even pay attention to it. And back then you could quote in sub-penny pricing, remember, too, before they put Rule 606 in. So, these quote changes were just crazy, and it's like, to watch it, it was like, hurts your eyes almost. So anyways, it's still a lot of flashing quotes and a lot of, obviously high-frequency trading, market making, and battling for Q position. But it's funny when you see it on a pre-market stock that's just, changing so rapidly.
And but you put it to an end to it temporarily. You put a real bid in there.
Oh yeah, you put a real bid in there, and then it'll pick up and start hopping your bid too. So it's funny how it works. You got that. You got them going, and then a real buyer comes in, and now they have to adjust for the real buyer because there's no real buyer in there. There's just two algorithmic buyers, which are obviously just willing to buy if the price is going to go way low to where they're pricing it down there. But it's a lot of shenanigans, but it's nothing nefarious. It's nothing. It's just two algorithms that are fighting for Q positions. So there's nothing bad, really, evil about it. It's just the way the structure of the market's set up, where you got so many algorithmic traders, two programs just trying to do the exact same thing, and they're going to battle each other for eternity until something happens, and like a real bid comes in.
Let's cover a stock real quick here. Yvonne is asking about Triple M. And it's trading up 60 cents at 164.45. Traded up here a little bit more than the market. I mean, is that a bottom?
There's life. You know what? Now, if you're trying it, at least it's showing some life. But we've seen this setup before a little bit. I mean, if you go back to the 20th, you had a 3 or 4. If you go back to the 20th, you got down to 65, 61, and you rallied $5-6 in the next couple of days. Eventually, the downtrend still persisted. You're trying to break trend here, so I would say it's attempting, and it's a nice whole number down there, 159, call it 160. So if you were playing it, I would lean on the low of the move, and if the low of the move gets taken out, well, it wasn't a bottom, then you can get out. But I mean, sometimes it's the best way in swing trading, is once you've got a little pull up off of the lows that stop going down temporarily, you try it out, and if it takes it out, you get out. The only thing is, if it comes out with bad news and it gaps down on you, that's never good either. But that happens sometimes. But I mean, if you at least it stopped going down, so as opposed to been going straight down every single day. So you're not trying to be a hero anymore. It looks like a short-term bottom is in. So it's same thing with the pins we talked about a couple days ago. They were, I think, yesterday on the show, and I was saying, hey, I can't argue with you. I want 2360 was the low of the recent move. They're back on the 23rd. last 3 days we've tried to, go through there. We couldn't. Even yesterday we got down to 23.91. Couldn't do it. I like it in the low 24s. I didn't do it because I get sidetracked and start doing other things. But if I think about it, I don't mind that buying that low 24s, lean on the low of the move at 23.60. And hey, maybe you get a little bit of a lift.
Just this going to the Triple M here. I don't know how much institutional interest there is in pins as of yet, and I won't call it pin interest. But the Triple M chart is interesting, and we could call this a Gilmo formation. Gil Morales. Well, I'm going to have to track down. We haven't had him on a while. Institutions, when they finally want to buy a stock or nibble a stock, it takes 1, 2, 3, 4, 5 days, 2 weeks, 2 months, right, to accumulate a big position. And someone was keen on that round number of 160. They started out at 160.50. That was a low. And then you had a low right at 160, right on the kisser. And everyone that was leaning on that got faked out when it went to 159.63, then 159.32. Then they reloaded. So, there's a formation. Now, the question is, are those buyers just going to stay there at 160 until they get filled? Are they going to up their bids? But a good level to lean on here. I don't really see anything in the monthlies that coincided with that. But 163.85 was your low in November of 2016. But definitely showing some life, and any kind of retracement here. You take this, I don't see it going back to 195 anytime soon. A lot of overhead supply, but a nice technical formation here.
We had a winner from yesterday, Pivotal One. Remember we were doing who could lose more, a Pivotal or GameStop? Pivotal was the winner. PVTL, I think, was down, what was it at the end of the day? Almost 40%. And GameStop only lost like 30-some%. So Pivotal won. Wow, that Pivotal chart. Woo, it's ugly. Anyways, we have a new candidate here for if we want to take it to a 2-day challenge. Cloudera is the new candidate. That's down 37% here this morning. So it's trying really hard to outdo Pivotal from yesterday. Hunter in the chat was asking, do you think about, buying anything like this, or do you think of bottom? I mean, it's day one here. I don't have any interest in buying a stock that's down 37% after day one. Obviously, we got a couple downgrades, I believe, here this morning too, with analysts chasing price, but these things stay in the gutter. They often do for a long time. So I think, when a stock goes to 547 too, Joel, and this would be the old Kenny Glick trade, it usually goes to $5. Right. So I would think if you're getting it, buying a 546, I would think you're early, just because these things often, when they've come this far, probably go down to the big psychological number of $5. $5 is always key too. It's a key number because that's where securities become marginable in a lot of brokerage accounts. And when you start falling under $5, a lot of brokerage account won't let you use margins. So it depends on broker to broker, but that's, a consideration there. So $5 is a big number, obviously, for a lot of stocks. I think it's come this far. Why not go down and test it?
What's the news on Cloudera?
On earnings.
Earnings. Yeah. Earnings, and the CEO is retiring. So the earnings themselves were fine. It was the guidance that was bad.
It's always the guidance.
Yeah.
Give us that.
The Q2 EPS guidance, they guided a range of an 11-cent to 18-cent loss for the current quarter versus a 9-cent loss estimate. And they guided sales of $180 to $183 million versus a $203 million estimate there. So light, very light on the Q2 EPS and sales guidance. Fiscal year guidance was fine, really. It was mostly the Q2 and the fact that the CEO is retiring.
I think it's the Sean Udall pick, isn't it?
Yeah. Yep.
I mean, Sean, he's been hot. He's done a lot of things right. Not everybody's going to get everything right. And obviously he's got this one wrong, because he's liked the stock for a while and it's $5 here now. But, we can't all be right all the time. If somebody was right all the time, 100% of the time, like they are on Twitter, these people would have all the money in the world. So you're never going to be right all the time. So it's all about, figuring out how to cut your losers when, you're wrong. Or, I guess if you're holding on, you got to hold on to you. I always say, if you're going to hold on to your losers, you better be holding on to your winners too to make up for it. Because the one disaster that I do see happen, I see this happen again and again and again, especially, from, investors, is that they cut their winners and they never sell the losers. It's shocking how many people refuse to take a loser. I mean, Regis Philbin was on CNBC and Apple was down, 100 points on him or whatever. I remember him talking about it. He's like, well, I'm down in it. I'm not going to sell it now. This is Regis. This is the mentality of the overall market. It's called loss aversion. There's a whole, from behavioral finance, there's a whole course on loss aversion. and people refuse to take losses. If you're going to do that, I'll tell you, and from an investing standpoint, it's okay as long as you don't take your winners. But if you're always taking your 10% winners, 10% winners, and holding on to your losers, hoping they come back or waiting for them at least to come back, eventually, inevitably, your portfolio will be filled with a bunch of losers. All of your money will eventually be tied up in losers. It has to happen. It has to happen, because you're always cutting. You're eventually going to go through enough stocks that you're going to end up with enough bad ones that there's going to be enough that don't come back. So maybe 90% of the time they come back, but that 10% of the time doesn't. Well, there's one loser in your portfolio. I need to keep doing it again. There's another loser in your portfolio. And it's a good way in the long run to make no money or to lose a lot of money. So I always say you've got to be willing to cut your losers, unless you're a long-term investor, then at least, have your winners run. So if you're going to have 50% losers, and I have some of them in my long-term account, you got to have a few 100% winners, 200% winners, 300% winners to make up for it.
Got good long-term strategy there. Real quick, before we got some more earnings to cover, but couple requests here about Intel here, and it stopped going down, right?
Yep.
And look at this $45 area. 45.18 was yesterday's high, sold off the close at 45.75. 3-4 highs in this area. I see 45.03, 45.05. Man, a bunch of. Let's get above 45 here, and I think you got a little room. You can lean on the low of the move at 42.86. But Intel showing a little life here, still under 45. So I don't know. I mean, I just don't think it's going to go from 45 to 50, but forming a little bit of a base and then finding resistance above the base. So I like it above 45. I mean, it's just going to come to a point when people are only going to be using AMD chips, right, Dennis? Only.
That's what the market thinks, and we got it. We can segue over to that. We can come back to the Intel in a second, but AMD catching another upgrade here today, trading above the big 3.0. This is huge for the stock. It needs to, now I don't know if it's going to open above there because it's already leaking. So it looks like to me like it doesn't want to open above there. I bet you there's some size there at 30. Obviously NASDAQ stocks, we can't look like at an NYOB or anything, but I would bet there's some size at 30. I think, might open at 30, depending on what the market does, but it could open at 30 on the kisser and then maybe break out. But I mean, the stock has had unbelievable resilience. The market thinks it's going to be AMD and nobody else because they've murdered NVIDIA, they've murdered Intel, they've murdered a lot of the other chips. So they think AMD is the play. And they could be right. I mean, I have a processor with an AMD chip. It's pretty good. So, it's not like AMD was always perceived years ago as not as good as Intel. And that's not the case anymore. The perception has changed. So, and that's not good for Intel, and that is good for AMD. That being said, Intel makes a ton of money. It's got a nice dividend. The bottom, is there a bottom here? I don't know. I still have a little piece in the long-term portfolio, very small piece. It's hard to say. I mean, is it going to go straight back up to 50? Nah, I don't think so. The trend is still not your friend. It's in consolidation station here. I don't know if it's consolidating to go lower or not, but at least if you're coming in here now, at least you have a tradable bottom. And what I mean by that is where your out is. If thing starts cutting through the 42.86 low and you were in a first swing trade, you got to get out because then it's breaking down. But at this point in time, it's still for me guilty until proven innocent.
We got some sharp cookies here in the chat. 169 ads that Intel invested about 730 million into Cloudera. Now it's worth 115 million.
I don't know anything about that, but I tell you, 730 million for Intel is a drop in the bucket too. So that's not going to really impact Intel.
And Zippity Doo Dah takes notes on the show, and he remembers a Udall call when it was at 12. He thought it could go to 18. So boy, oh boy, Dennis.
I mean, Sean has given us a lot of really good calls on this show. I mean, out of everybody who we have on this show, think about some of the stocks he's given us. So, he's not going to get it right all the time. So, not coming out just flat out defending Sean. Sean has been wrong for a long time on stocks too. I mean, for Twitter, he was wrong forever. And, Sean is a long-term holder. He holds. So, and he'll tell you that. Like, Sean isn't a huge fan of using stops. He lets the things continue to, move against him a lot of times. and he'll hold. He's a contrarian. So a lot of times when you're a full contrarian too, you have you have a situation where you're always fighting the tape. So immediately in a lot of positions, you're probably going to be down. But Sean holds on. If you're listening, Sean, I know you've told me this before. He holds on, and he's longer term stuff. He'll hold on to the winners for a longer term, too. But he's not huge on just stopping out, because he's almost all fundamentals too. Like, he looks at technicals a little bit, but if he likes the company, he's analyzed the fundies, then he comes in and he starts buying. If it gets cheaper, he often he'll stick with it because he still believes in the story. So if he stops believing in the story, I guess that's where he sells it. But I mean, we can bring Sean on again to talk about what he does, and I'm pretty sure he's long cloud era. It's good for him to talk about losing, and good for us to hear about how people deal with the different losers too. So you can't be right all the time though.
Qualcomm looks interesting here. Speaking of those stocks, I mean, you had the gap and go. They took it to 90. Then they came down. They did fill the gap from the Apple lawsuit, and then you found some support here. 65. I see a couple different lows in there. You're $2 above it. It just looks a little tired. Let's see if it can hold that low, but there's a nice gap fill in Qualcomm.
They've stopped going down. Intel, Qualcomm both have stopped going down for now. But again, a lot of times what you see, and here I am talking against my book because I own both Intel and Qualcomm in my long-term portfolio. Wish I didn't own Qualcomm, but a lot of times what you see is after a big move like that, you see a period of time where the stocks stop going down, and then you see a resumption of the previous trend. So if this stock, for whatever reason, was to break down and start going below 64.76, I think it could fill that whole big down to 57.29 when that good news came out. So can it come back up? I mean, Qualcomm's a wild card too, different than Intel, because you've got that potential where something could happen with that ruling over there. I mean, this was, a news event that knocked it down. It was an unexpected news event. What was it again, Spencer? The details, something with China, and what was the Qualcomm news that knocked us down that 12 points that day?
There was like 3 headlines.
Yeah, what was the main one though? It was some rule, some ruling or something, or I can't remember. Chad, help me out. I have the goldfish memory here going.
So there's the antitrust thing with Apple, right? So there's the two Apple headlines, and there was and there's also the Huawei stuff.
Yeah, was that the big one though? Was that the big one that went down?
Well,
that was afterwards and knocked it down more.
Yeah, what day are we talking here?
We are talking
when it went the 21st, it was like 70, closed at 77.75, and then the next day opened at $69. So night of the 21st, or morning of the 22nd. Maybe it was the morning of the 22nd.
Yeah, that was the antitrust thing against Qualcomm.
Yeah. And I mean, so there's a wild card there. We don't know how that's going to turn out, because that was just an initial, like, I'm trying to remember this, so you help me out here.
I can't remember it.
We see so many stocks. We talk so many different stocks.
No, I'm telling you that was the FTC versus Qualcomm and the antitrust.
It was the FTC. Okay.
Yeah.
So anyways, we don't know how that's going to turn out too. So I mean, they could turn around and that could turn out okay too. So at the end of the day, I mean, Qualcomm's obviously going to appeal that, and we don't know how that's going to happen. But anyways, so that's kind of a wild card. But just going back to the pure technicals here, is I don't usually like, when you see stocks stop going down, everybody's quick to jump in. But there's so much overhead supply. There's so many people who are down money. I mean, I'm one of them. So on Qualcomm and Intel. So these stocks you typically just don't see like these U's happen, where stock goes down, consolidates for a few weeks, and then just pops right back up. You rarely see that unless it's going to be another news event that takes it up. So usually it's a resumption of the previous trend. So I'd actually be more prone, if I was a trader and trading these. Like I said, I have these in my long-term portfolio, so I'm completely talking against my book again. But I'd actually be more prone to probably short Intel and Qualcomm here, as opposed to buy them, because I think that previous trend could be resumed if they break down. So I probably would be a better trade for me, that is if they actually start breaking down, to play them from the short side.
Before we go to CIEN earnings, Steve Roberts is asking about Oracle here, Dennis, and a quick rebound for Oracle off $50 here. I don't know if I could chase it. 49.89 was the low. Stock's been under pressure. I think for me, we went from 50 to 53. Yep. This just called a 3-point move. I don't know. I'd like to try it. get this at like 51.5 area as opposed to chasing it. I mean, it's had
You've never had to chase Oracle.
Never.
Not in the last. Go back to the monthlies. I mean, this thing is always choppy. It's a stock that perennially disappoints on earnings and then comes back. We've talked about this. It often falls $3-4 on earnings. Then you look at it a month later and it's right back up. So I've owned this one in my investment portfolio forever. I'm in from, I think, $9. So I'm obviously going to probably be holding on to those shares because I'm in forever. I've sold some too, so I'm completely playing with the house's money. But I think, you know, when you look here at Oracle, it always seems to somehow, like, look back to the earnings report, Spencer. I feel like it's like 3 out of 4 this thing disappoints. It comes down, it falls 6% on the earnings, then eventually rallies back. So I think you're always better to be buying the dips on Oracle as opposed to be buying the rips.
Eric?
I mean, they beat a lot, but I don't. That's not.
Stock seems to go down. Don't you remember that too?
That's not. I do.
Yeah.
That's not indicative of whether or not the stock goes up or down.
Yeah. So I just think it usually pulls back on earnings. So usually you get a shot. When's the earnings report on Oracle?
I don't have a confirmed date. Potentially June 18th, but that's not confirmed. It's coming up.
It's coming. It's always late in the earnings season, so that's why I ask. You know, we're at the end of earnings season. It's always one of the later ones to report. So there you go. So I'm not buying. I'm definitely not buying Oracle ahead of the earnings because this is one that, like I said, often disappoints.
All right, let's go to, we do have some earnings besides Cloudera, and Dennis, Sienna here, CIEN. You noticed some was it after hours?
What stock you looking at?
Yeah.
What is it?
Sienna Corp.
Oh, Sienna. Yeah. Like, give us the numbers here. I'll tell you about the after hours stuff.
So their report was this morning. The Q2 EPS beat 48 cents versus 41 cents. Sales beat 865 versus $819 million. I don't know if they gave any guidance, but it beat nonetheless this morning.
This thing was aggressively getting bought ahead of the report last night. Like, I mean, aggressively. People were paying up to $38. And I actually was I tried to short it up at 38. I just couldn't get hit. I'm off exchange market makers matching my offer and stuff. So I was trying to short this up because it was giving me a 2-point lead. I didn't get short, so it was a good thing because it continued to go higher. But it's amazing. Sometimes sometimes after hours, they're wrong. In the case of Tiffany's, that one night they were wrong. But this was a buyer that just kept coming back, and buying aggressively last night. And I don't know, like, maybe they know nothing. Maybe they're just guessing, or maybe they got a feeling that Sienna's going to be reported. Maybe they're reading the tea leaves. Maybe they're reading sentiment. But the market was trading down last night, so sentiment wasn't that great last night anyways. But I tell you, I don't know if, like, the companies, and this is an interesting conversation, but I don't know if companies are this dumb or not, but I speculate that in some cases, could it be possible? I'm just asking everybody, could it be possible that market closes at 4 o'clock and everybody, the majority of your investing public, do not even know that after hours exist? How do I know this? Because I tell people that I'm trading at 5 o'clock and everybody's saying, well, what are you trading? Hong Kong, or what's open at 5 o'clock? And I was like, US markets. They're like, I thought it closed at 4. Everybody that isn't a day trader, not everybody, but a majority of the investing public do not realize that 4 to 8 even exists. They think the market closes at 4 and that's it. So could it be possible that some companies are, or maybe some people in the companies don't even realize that there's an after hours, and like at 4:05 or 4:10, they're saying, well, we're going to report in the morning. Now we can tell a few people about our results because the market doesn't open until 9:30, and our company and our stock is going to, not trade until after, we report our earnings at 7 o'clock in the morning. Could it be possible that there's some execs in companies that are that dumb that they actually think that they can tell people? Because it's amazing how many times after hours these people are right. Like, this Sienna buyer was just so aggressive last night. I was like, does this guy got the report or what? So anyways, and obviously is right. I'm not saying, maybe it's coincidence. We don't know. We can't know why somebody is buying a stock. But holy cow, was that person aggressive last night buying CIEN.
Never underestimate a person's capacity for stupidity.
Do you agree with me? Like, I get it so much because I trade after hours a lot in pre-market. I tell people I'm working from 4 to 8. And majority of people, these are mutual fund investors, maybe not day traders. I always get, like, if I say this to somebody new, I almost always get it. They're like, well, what are you trading? I thought the market closed at 4. Everybody thinks the market closed at 4. It does. but there's after hours. I think that a lot of people don't even realize you can trade stocks after hours. And if those company execs don't realize you can trade company after hours, maybe they're telling people about the results before they should.
Or someone in
That's a question.
Yeah, that's a question. I think it's a good question, and we'll see how the chat responds to it. Let's see here, 8:30. Dennis, we still get some well, let's do the Sienna report, and then.
Well, I gave the numbers. They beat.
They beat, and
$40.
Okay, 40.
That's big. 40. It's coming into it, but we've seen this is the pesky way this market has traded for a while. It seems like, when the ball gets going in one direction, it can get really ugly. And we saw this obviously in the case of just trading here. I'm getting trades on right now, but we saw this in the case of Cloudera today, with GameStop yesterday. When the ball gets going in one direction, it keeps going. We've seen it on the upside there too. So I don't think I'm coming in here trying to call a top on Sienna, because it's obviously, been trading up substantially on 230,000 shares. They like this report. And we've seen some blow off tops happen. People saying, okay, 40 is going to be the top. So I would maybe lighten up if I was long enough 40, but I'm definitely not trying to short a rocket ship.
How about 41.50?
I'm still not going to try to short the rocket ship, but if I was long, I would definitely lighten up in there.
Yeah, that is your
That's just me.
Yeah, 41.50, and I'm looking. A major high was 40.76, so that was your high on April 24th. So I would use 40.76 as a target on the upside, up another buck, and then pre-market high 41.50 to really get things rolling. Dennis, Spoo's up 7.5 handles, 0.27%. Stocks lagging here. What are the imbalances look like?
You know what? We're just kind of, it's interesting. We're just kind of just hanging out. And the imbalances, I don't see much again. This is every single day lately. We haven't seen much happening. So I'm trying to find some of note. And really, I don't see anything significant here. Not that isn't news. And that's one thing. I'm not going to give you, like a Cloudera is 250,000 to sell. We know that. It's going to have probably millions of shares to sell by the time you get the opening, because it's relative to the close. So by me telling you that, it's not telling you any information. So I typically, when I give you this imbalance data, I'm not telling you about the news ones typically, because we know, if it's got good news, it's probably going to have a buy imbalance. We know if it's got bad news, it's probably going to have a sell imbalance, because it's relative to the close. So a stock gets upgraded, it's going to have a buy imbalance eventually, because it's upgraded. It's probably going to open up. So I try to give you the ones that are just kind of out of the blue. Okay, I don't see news on this. Like Alibaba this morning, 41,000 to buy. There's no real headline here from Alibaba, not a major one that's market moving. So it's always of note. But 41,000 for Baba isn't much either. So I just don't see a lot here this morning.
All right, 8:33 here. We're going to grab our guest in a couple of minutes. Let's do
the last earnings. Do the Stitch Fix. Let's fly through it.
Yeah, biggest gainer, or one of the biggest gainers of the morning here, Stitch Fix, reporting yesterday after the bell. Q3 EPS 7 cents versus a 3-cent loss estimate. Sales of $408 versus $394 million. So beating on both Q4 numbers, or Q3 numbers, excuse me. That's all they got. No guidance that I'm seeing.
Just a huge move here for Stitch Fix. I thought about fading this one.
Boy.
And you know what? I did. I thought about trying to fade this thing. I got up to 28.50, 29, and I'm like, holy cow, really? Some reason I didn't do it. Glad I didn't, because it kept going up over $30. It got up to like $32 last night. I remember the last report. Why you've got in your head is because on the last report, do you remember in March, we had the huge move from 26 to 36, and then a week and a half later, it gave it all back. I don't know if history repeats itself. It sometimes does, but I'm definitely not buying Stitch Fix up at 31, 32, because I saw what happened to the people who bought it last time. So I would say sold to you if you're buying it up here, but I probably don't have the guts to short it either.
It is up $6.63 at
28%.
Yeah, that's a huge move. I'll just give you your pre-market high. Your pre-market high comes in at 32.10, so you have faded $2 off that. On that day when it gapped up, let's see here, 34.11. So you would have been early shorting it, because that day it went up to 37.72, and then it ended up coming back down. It still ended up on the day. So who knows? I mean, it could take some heat here if you're shorted off the open. But wow, big move here. But it is a couple bucks off its pre-market high.
All right, 8:35. I want to bring on today's guest, Todd Sullivan. He's the founder and general partner of RAND Strategic Partners. He's also a venture capitalist. Todd, how is it going this morning?
It's going excellent. How are you guys?
We're doing great. We're doing great. It's been a while since we spoke. How are things up in Massachusetts?
Rainy. It's been miserable this spring. It's the coldest, rainiest spring I can ever remember.
Well, at least your sports teams are winning. We can't all be so
Yeah,
can't all be so lucky.
Although I think the Bruins might be in some trouble. So,
in any case, Todd, you mentioned that the GSEs are on your radar, and I wanted to ask you about those. Fannie and Freddie. A lot of investors have been betting for years now on this recapitalization happening one day. Seems like that day is soon. Is there any chance that they put the cart before the horse here, and that this trade is too one-sided now, and it's not going to be as fruitful as people have been hoping for?
So I think that may be the case right now, the common shares, which is I recently sold most of my common shares and rolled them into the $50 preferred shares. Right now, the preferred shares are trading at about a 45% discount to par. These are the $50 preferreds. My thinking is that in any recap, preferreds are going to become common. They're going to become common at par. So I got about 105% upside. And I think that day could come sometime in June when the plan's released. I mean, if they come out with a plan saying this is our guidelines, this is what we want to do, we're going to have to convert these preferred shares at par. There's no reason for the preferred not to start trading together anyway. There's a lawsuit done before Judge Lambeth with preferred shareholders. Those remanded back to him. It's going to go to trial. Preferred shareholders look like they're going to be getting some damages in there, which could boost the value of those preferreds to 150% of par, which is pretty good upside in a very short time.
So is this a short-term trade or more of a long-term trade?
Well, it all depends. We don't know what's going to happen with Treasury and FHFA when they come out with their guideline of how they want to do the recap and release. They pretty much said that's what they're going to do. We don't know the form of it yet, but in any scenario that I can come up with, they're going to have to deal with current shareholders. Now, FHA did come out last week, and not last week, 2 weeks ago, and said that the common is going to continue to trade. Well, if the common continues to trade, it's bankruptcy law 101 or restructuring 101. If your common's worth a penny, then your preferred's worth par. And so that's when I got out of most of my common. I went to the preferred shares, and that's because of the spread difference and what I think I should be able to get. Post recap, I think there's a lot of upside for the common, but if I'm in my preferred, I'm converted to common, I share that upside. So I get upside both ways in that trade.
Which preferred shares are you talking here? There's like 10 share classes.
Yeah, so I did the M's.
They're all OTC, and they're all not super liquid.
Yeah, they're not super liquid. So they're all going to be treated the same. So I did F, N, M, A, M, L, and N right in a row. The interesting little trades. A lot of people hold the FNMAS, the S, which is $25 preferred, but that's trading about 56% of par. So by selling that and swapping into the other preferreds, you're going to get about a 10% gain right there, because you're either going to get 10% more shares because of the difference in the spread to par. You're either going to get 10% more shares, or you're going to pay them out for 10 and pay 10% less the same number of shares. So,
how is trading OTC stocks different than exchange listed stocks?
Well, especially for these, because they are so liquid, you have to put a limit order in and just sit there and wait. I'm not a day trader, so I wouldn't trade these actively, but I find some of the spreads are pretty wide, $1 or so in some of these in any given day. Some of them run a tight spread. The FNMAL one has a nice tight spread, usually about 5 cents. And if you're buying this for 100% upside in a couple months, then 5 cents is 5 cents. So you just put your limit order in, you just sit there and wait, and it'll typically fill throughout the day, because they will trade in a pretty decent range, but they all kind of settle around the same area.
All right, that's enough. I'm done with my Fannie Freddie, Joel.
That's pretty good, Spencer.
Oh, thank you. Thank you.
Pretty good on that. I'm very, very proud of the way you handled that. So why now? I mean, why? I mean, this thing's been going on for years and years and years. And what are you seeing? What's the catalyst here? I think that finally going to be some kind of resolution.
Well, yeah. FHA and Treasury said in June they're going to present some plans. So this is the first time we've had a definitive date as far as when we're gonna hear what they want to do with these and how they want to treat them. We also just got a court date in Judge Lamberth's court down in DC, which we had not had a court date for a trial yet. So those are the two main catalysts that are coming up. And I think the potential outcome, given the direction I was given by the appellate court to Lamberth, I think would be an impetus for someone to want to settle those suits before they go forward.
But didn't they also guide that any plan would probably try to change the business models in some way, right, over time?
Yeah, so they're going to have to in some way. They can't make huge fundamental changes to them without Congress. But I think that that's sort of secondary to the trade for the preferred shares. If the preferred shares are going to be made whole, they're going to trade almost to par pretty soon, because that's the value what they're going to be worth, no matter what plan they come out with, right? They still have to recap and release them.
Right.
If they release them and they make structural change, maybe that is profitable, that's going to affect the common after. But the preferred still going to be worth par, still going to convert at par. So you're still going to capture that differential, right now 45% to 100% of par.
You got some other things on your radar here, and two stocks. You're looking at Kinder Morgan here. That stock has had a nice rally. Talk about what you're looking. It's been sleepy since 2016. You made that low under $15. Looks like you're really trying to break out here. You need to get above 23. Tell us what you like and what you're purchasing in KMI.
So Kinder Morgan and another one is Williams. They're both paying about a 5% dividend right now. So dividend investors like them. They're self-funding their entire operations now. They're not taking any more debt. And they went through a really tough period when oil prices collapsed in 15, 16. A lot of these companies had to sell off some assets to pay down some debt, and they've accomplished that, and they have the debt levels what they want. They're both back to investment grade ratings, BBB, and now they're just operating and they're growing. And pipeline demand is off the charts right now. I mean, the biggest problem in the Permian Basin is they can't get the stuff out of there. They're producing so much. There's not enough pipelines. They're building new pipelines, 100% contracted for 15, 20-year contracts. So they're selling these things that are cash flow positive from day one. They operate them and fill the pipes. There's a lot of growth ahead of these guys in the future. They spent years putting the troubles behind them, and they're finally to a point now, I think the investment community is starting to wake up and realize that, hey, these are worth something, and these are worth a lot. Private equity has been piling into the space and buying some of these smaller pipeline operators at 14, 15 times EBITDA. And these large ones here are trading at 8 to 9. So private markets are realizing the value of these pipelines more than public markets are. And I think at some point that changes. And if you can get a 5% dividend that's covered 1.5, 2.5 times by cash flows, that's a safe dividend. They're buying back stock, and the dividends are growing 15, 20% a year. And Kinder Morgan's growing the dividend at 25% a year right now.
Another one that's looking a little perky here, Williams Company had a nice rally, dipped, I believe, into the 25 handle. I think that was the low of the move at 25.90, and then a spirited 3, 4 day, 5 day rally here. It looks like you got a little bit of a wall at $28. Tell us what you like and what you're investing in WMB.
So it's almost the identical story as Kinder Morgan. They overhang in debt, sold off assets, consolidated operations. They worked through their issues the last couple of years, and now they're breaking out to the upside. They're yielding about 5% too. Interesting. If you own both of those, Kinder Morgan really owns the sort of the Midwest and the West and the Texas area, and then Williams pretty much owns the Northeast with the Transco pipeline, which is the largest natural gas pipeline in the U.S. If you own those two, you touch about 70% of the natural gas that runs through the U.S. every single day. So you almost have a monopoly on natural gas transport, and you're going to get paid 5% to sit there. It's like a toll booth. They just collect money every day. And just like Kinder Morgan, everything they build is fully contracted on decades-long contracts. So its cash flows are really secure. They have very little commodity risk now. Their contracts are take or pay. I mean, you are buying space on that pipeline whether you use it or not. Diversified supplier list. So if one has trouble and can't supply, they have plenty of others that want to buy the space. We don't have enough pipelines right now. We don't have enough space to put enough gas in these pipelines. So their risk to the downside, given what they've done in the last few years, is very minimal at this point.
All right, we got a little dip here in the S&P. I'm not sure. We have pulled off that high of 28.38. I just had about a quick 3-4 point drop here. I don't know if any of the imbalances shifted or what, but a little bit.
Or Draghi's talking right now.
Draghi.
Yeah.
The market usually goes up when the dragster talks. So I'm not sure.
Trump might be tweeting or something.
Yeah. That's always what that's the second go-to. So is there anything out there you don't like? Anything you're avoiding or anything you're shorting?
I don't like Tesla. I've been short Tesla a small amount for quite a while now. Financially, the company's a mess. Yes, Musk is a genius. Yes, the cars are great, but I'm reading more and more about quality issues as the last couple of models have come out, and having to borrow that money to fill the gap. They're missing sales estimates all over the place. I think that by end of summer, fall, the company could be in serious trouble. At some point, Musk is going to get a margin call on his shares, and his personal finances, from what I can discern, are a house of cards when it comes to that, and it could end up being a huge problem. People keep asking, at what level would you want to own Tesla? I wouldn't want to own it at any level right now. I know people are going to freak because there's a devoted following, but just because a guy's a genius doesn't mean he can't run a company into a ground. I mean, Jobs did it with Apple the first time around. And there's no reason to think because Musk is so smart that he's going to be a great CEO. There's a lot of problems at Tesla, and they're coming out daily. And I think I wouldn't touch it. I'm happy to be shorted. I'm happy to be shorted for another $40, $50. I think someone might be coming to be dumb enough to buy it at those lower prices, but I think there's plenty more downside ahead of it for Tesla shares.
Tesla also with news this morning that they delivered 33,000 cars so far in North America this quarter. Although I'm not sure how that relates to their guidance of 90 to 100K.
Getting a pop
worldwide. Yeah, I know, but their guidance was 90 to 100K worldwide for the quarter, and the headline this morning is 33,000 cars so far in North America. So we'll see. In any case, anything else that you're not liking, Todd?
That I'm not liking?
Yes.
Yeah. No, Tesla's the main one that I'm short right now and I don't like. Beyond Meat's interesting for me because I can't tell if it's a fad, or I can't tell if it's a short-term fad or a new way of living for a lot of people. But it's priced incredibly high. But I don't know. I'm looking into that one to see what I like either way with that, but I can't come to a decision either way. I haven't tried the burgers yet, so I guess I should try to see if it's a fad or just if it's a new way people are going to start consuming food.
Well, we've all tried them, and I think the consensus was mixed reviews across the board from our perspective.
I mean, they have Burger King. If they can get into McDonald's or some of these other fast food places, I mean, then you have to look at their current share price. Like, well, I mean, their growth is going to be astronomical. So it's but then you also there's going to be competitors in the space now, right? People are going to see how successful they've been. It's only a matter of time before they start getting flooded with competitor products that kind of maybe dilute their growth. So,
all right, Todd Gordon has been on with us. He is the general partner of RAND Strategic Partners hedge fund out in Massachusetts, also a venture capital investor. Todd, thanks for the time, and have a good rest of the week.
Thanks, you too. Anytime, guys.
All right, 8:48 here, and
we're selling off.
Happening?
We're going back. Looks like we want to get back to unchanged on the session. Draghi putting a little damper here on the party. Unchanged would be at 27.75, and mid-range is right in that area too. So a lot of interesting morning, a lot of action. Dennis, are you? Did you get any trades off? I see.
Trying not to get picked off. Doing a lot of quick order adjusting on that little 3-4 point fall, but yeah, market is obviously giving back its gains. I mean, it's a choppy session, so you can't just say, oh yeah, we were way up, we're giving it back. I mean, we were way down last night on these Mexico tariffs. We were down at one time. I'm getting hit on AMD. as we speak, and it's the worst one to get hit on because the thing moves. But I mean, this is going to be a situation where I'm going to have to cancel all my orders because we're just coming in too much. So here we go. We cancel. We cancel all orders.
All right.
Cancel all orders button, just as high frequency traders do.
All right. Well, since we talked about
doing a live radio show, so AMD, the reason I would be buying that, like the reason I just bought that was because it's upgraded today. So, and I was thinking it was going to get up there to test 70. Or to test $30, and I don't know.
You just said it wasn't going to open over 30.
Yeah, well, I didn't think it was going to go down 29.70. I make market, so I'd be shorting over 30, but buying it. I said I think it's probably going to open at 30, but we've come in enough that probably bet is off the table. So I don't want to own what I just bought, but I got picked off. Market's coming in.
Well, all right. Well, Joel, beyond meat.
Well, you cancel all orders. You
I
get 2,
think
3,
so.
4 fills that you don't want, you cancel everything. It's called getting picked off. Market's coming in.
Dennis is trading. Oh man, I'm getting picked off. I had time to cancel all reset.
It's hard to do the radio show. You know, we're usually good. Like 90% of the time, there's not that much movement. 2, 3 S&P point movement, no problem to do a radio show. When you are trying to, you know, work orders and you got 10 S&P point movements over, you know, the course of the show, it gets.
I just gave you a 15-minute break.
Yeah.
I know. I needed it. I needed to adjust it. Obviously, wasn't enough. I'm still getting picked off and stuff.
All right.
It's probably
I'm
our
gonna work out of this AMD now.
okay. Let's see.
All
here.
right. Beyond meat heading into their earnings report
God,
tonight.
I don't know what
don't know?
I don't know what to say. If you're long this stock and
Good for you.
if you're holding into the report, then God bless you, because I just could not hold this into the report. Maybe look at, I don't know how juicy the calls are, but like, let's say you could get like a 105 call, you know, for $5 and you're selling the stock at 110. I mean,
we gotta go check them out.
yeah.
Check them out. What are those premiums? Somebody else says I don't have my option system platform open yet. Do you have yours
It
open?
always seems like you want to sell options that there's just not as much premium, but when you want to buy them, then there's.
Oh yeah, they'll have that jacked right. I don't think there's no way you get like a 105 for $5. Let's go.
You don't think so?
I don't
Well,
think
you
so.
talking about the weekly? I bet you.
Yeah, on the earnings report, I would buy that for. I don't think there's no way it's gonna be $5. Probably like $10.
You think so?
I think so. It's crazy. Stock's crazy. First earnings report. I bet you $10 for the 105.
You think so?
We can bring it up.
I don't have that platform up.
You don't have it open yet either. I don't have mine open either. What's the 105, $10.
Really?
What's the 105 going for this week? I think it's $10. $10 for fun. Predicting a 14% move, Frank Ass says, is what he's got the options, this straddle looking at. What, anybody got that option? What it closed at?
No, I don't.
I gotta open up the platform. Okay, I'll open it up.
I'm sorry. I could do it. I'm just trying.
I'll do it too. Here, 110. You know what? It's not that bad, Joel. You're right. Is that right? June.
What, 850? Is that what you're saying?
No, what the one? Well, we're looking at the 110. Or
Oh.
what did I say? 105 or 110?
Yeah, you
105.
said
What did you say? 105? Joel, you're good. It's $5.
Yeah.
105 is $5. Doesn't that seem low?
I mean, that's 2 days worth of premium here, 1 day worth of premium. So, I mean, that's it.
I'm gonna go 120. That seems low. $5. Really?
Yeah.
Oh, these option guys usually get it right, but man, that seems low. $5 for the 105.
Yeah.
All right. Uber.
So it goes 110.
Uber.
Breaking it. I don't know, man. That seems low to me.
Uber. Big technical level yesterday. It finally reached above its IPO price.
Nick Shaheen came on our show and was bullish. This good call, Nick, if you're listening. We've liked it too. We've liked the setup here for the last little while. I was saying, it stopped going down. It was starting to look like a breakout over 42, and it did. Got up over 45. I'm gonna, from a paper trade, I don't own this thing, but Lyft and Uber both showing life here right now. So I'd like it on pullbacks.
Yeah, boy, that we talked about it. I kept an eye on 40.5 because at the time that was a 50% retracement, and then it just kind of dipped around, went into the lower 39 handle. It went to 45. It didn't close, but it closed right at 45, trading at 44.83, 45.66 here. So I think you'll be able to get it a little bit cheaper than this, but it's important. It got up over 45. And if we're looking at that, we need to look at Lyft, and Lyft has gotten a lift back up. Oh, this is still showing some life at 62.05. This just seems to be a big level here because when it tried to rebound before, the rally was capped at 63. Yesterday's high, 63.24, trading in the red. So I like to see a couple closes above 63 for another leg higher, but definitely getting off the mat.
Don't look now, but Under Armour.
Oh yeah. UA or UAA?
UAA is the more active.
Boy, one retailer that's doing well here traded up 16 cents. That got some street love, didn't it? Didn't it get a couple upgrades a while back?
Not that recently.
I'll tell you, I got one pair of Under Armour shorts. I don't like them. I don't like them.
I have a couple Under Armour shirts. I like them. Comfortable.
Big run here, up what? How many days in a row is this up? 1, 2, 3. Wow, I had a little down day. I don't know. Strong move here. I mean, at this point, 25.92. Not seeing anything on the monthlies here.
Well, the daily, I think that was an earnings gap from January of 2017. Or this
is up here. This is a unusual retailer here. Are they not? Well, I can't find anything. You're at your highest level since going way back. I gotta go way back.
January 2017, I think.
Wow. I don't know. This one, can you see anything in the book, or is this not that heavily traded to get enough in the book, Dennis?
UA is on NASDAQ.
Oh, okay.
Oh no, it's UA is new. I forgot. UA switched years ago, didn't it? Because there is a book in UA. I thought UA was NASDAQ at one time. Wasn't it UA NASDAQ at one time?
I can't keep track of these stocks.
Anyways, I can grab a book. So UA 23, 29,000, 2380, 41,000, 25, 72,000. They're all pretty small.
Yeah. Okay. All right. What else do we want to cover? We got about 4 minutes here.
Under Armour was near the top of my list. There was a couple. Oh, you know what? We talked about Beyond Meat at reporting after the bell. What about Zoom, ZM? They're the other big runners.
Big report.
Yep. Any thoughts? Anyone? Bueller?
Right now I'm trading Netflix, so I've gone silent in the background because there's lots of trades right now. Sorry guys, I'm trying to stick with you here, but as you get filled on stocks like AMD and Netflix, it requires attention.
They have something called an earnings report. They're going to release some numbers today after 4 p.m. Eastern time, and I was hoping you could provide some commentary on the stock trading a few hours ahead of what is known as an earnings report.
Boy, oh boy. Let's see. You made a low in this one. Let's call it $60. Call it 90, a little over 90. So that's 30-point move, 65. Boy, oh boy. No, wait, let me do any math. 60 to 90 is a 30-point move. 15, $75 is the mid-range on this. It did dip under 75 a few times here and a little bit of a relief rally ahead. So I don't know. I mean, this stock has had a big run. Looks like people are lightening up ahead of the report. I keep a real close eye on 73.58. That was their low on May 29th. I think it really opens up on the downside on that. And I think if you get a pop in this one, 83, there's a couple highs in here, 81.94 and 83.17. So now that you've fallen so bad, so far off the high here, if I could squiggle up the chart, I would say it's just finding resistance here ahead of the all-time high. Don't expect it blasting back to $90.
All right, notable ratings this morning. An upgrade from Longbow on Goodyear Tire, upgrading to neutral, not super interesting. Raymond James upgrading digital reality DLR to outperform. We talked about the AMD upgrade. That's at Morgan Stanley to neutral. Goldman Sachs with a pair trade this morning. They're upgrading UAL to buy. They are downgrading Spirit Airlines to neutral. That's it on the upgrades front. On the downgrades front, the Travelers Group downgrade at Keefe to neutral. I mentioned the Spirit Airlines downgrade. Cloudera, as you'd expect, a couple downgrades after their report. And not seeing too many other notable.
CGC initiated. There's a big pot note from Stifel.
I didn't see that one.
Yeah, they were all neutral except they put on their hold, they call it. Canopy Growth, they put a buy on that.
Yep, Stifel
is trading higher. One word of caution, though, is with the Mexico stuff happening, Constellation Brands is trading down. And not that these pair trade together, but there is a relationship, obviously, there. So, and STZ was very weak there last night, traded down to the 181 handle to come back because they've kind of forgotten about this Mexico stuff, at least from last night, temporarily. But CGC, obviously STZ owns a big piece of them. CGC is trading up, though. It's up 31 cents. The pot stocks had a pretty good 2-day run. They started to give it back yesterday morning. And so now it's, it's interesting. You're kind of right in the middle. Like you look at the ACB, you look at the CGC, you're kind of in the middle of nowhere.
Yep. Stifel neutral on Aurora, Kronos, Tilray, and buy on Canopy.
Yep.
All right, we're going to end the show here with the S&P's up $1.50 at 28.29 a quarter. Now we're substantially off that pre-market high of 28.38. So my hope to short this at 28.41 seems to be a little far away now. But folks, remember, we got jobs number tomorrow. And with all this talk about interest rates, the weak ADP report, I mean, you're expecting a horrible number tomorrow, right? And then everyone's going to be right that rates are going down. I don't know how much things can change from one report to another, but I think you see some. I think your high and low of the day could already be in here. That 28.38 on the upside and 28.12.75 on the downside. We could just have a little bit of a chop fest. Of course, unless you get a tweet, a Mexican deal, a China deal, or both, or we start a tariff war with another country. Triple D, any other final thoughts?
Headline-driven markets, so it all depends on what the next headline is. It's going to dictate it. Technicals are taking a back seat to headlines here right now.
All right, and on that note, that's it for today's show. Thanks to our guest, Todd Gordon. Thanks to all of you.
Not Todd Gordon.
Oh, not Todd Gordon. Todd Sullivan. You were on with Todd yesterday, so he was on my mind. Todd Sullivan from RAND Strategic Partners. Thank you very much to everyone in our chats. Questions, comments, concerns, email us, premarket@benzinga.com. That goes to all three of us, and one of us, well, not Dennis, will surely respond to your email. Missed any part of
Dennis right now doing anything. Dennis can't even focus on the radio show. He's making so many trades.
Dennis doesn't read his emails.
Dennis, what are you going to do at the event? Because you're not.
Well, I'm not going to be trading, so I'll just take the day. I don't take very many days off, but I'll probably be watching the markets closely. Maybe I could do some long-term stuff or something, but obviously
You're going to be Jones.
I don't have the systems there to be able to, do my regular statistical arbitrage strategy.
Yeah, you can. Maybe you'll just take everyone's computers and
I need all of your computers. I need all of your algorithms.
All right, Benzinga Trading Summit, June 20th in New York City. Promo code PMP50. It's all caps, PMP50 for 50% off. But I know tickets are limited, so check that out, bzprofit.com. That's all I got. Please remember, all the information from our show is for informational purposes, not meant to be investing advice. Everyone have a good rest of your day. We'll be back with you on Friday.
Crazy markets.